What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw a very volatile sell-off with the tech sector looking the weakest. We still see the Dow Jones leading the way, with the Dow actually closing in the green today. So first up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. So on the S&P 500, we did see the price action closing down 0.77% today. And that's a price action close below the 5 EMA as well as below the 13 EMA. We're still holding up above a positive sloping 20 simple moving average, so we don't want to give up on this bull trend while we're still in an upward trend. We did see some volatility and some selling since we hit that price target, which was up there at SPY levels of 393. Remember, it's still possible this market's going higher, and this is just a miniature sell-off before we find support and start heading back higher towards 393 yet again. In order to invalidate these price targets above, we need to see the 5 EMA cross below the 13 EMA and the price action start closing below the 20 simple moving average. So right now we're still in a bullish trend with bullish price action because we're still holding up above this positive sloping 20 simple moving average. So watch that level very closely, which is right around SPY levels of 385. If we start closing below SPY levels of 385 and we start breaking down below support at 384, it's very likely that we could come back down and close this gap at 377. This gap down here at 377 is going to be a very significant support when we finally do see a correction and we start closing down below the 50 EMA. You can see the 50 EMA is up here at 378 and it's rising each and every day. So even though the market has been volatile and you're probably losing money on a lot of other stock positions, if we look at the S&P 500 from the highs to today's close, we're only down about negative 1.8%. That's really not that big of a sell-off, even though the rest of the market is acting much more volatile in other sectors. This still seems somewhat like a sector rotation, and as you can tell from the S&P 500's price action, we're still not even close to cracking down below this bull trend. The 5 EMA has not yet crossed below the 13 EMA, and the price action has not yet crossed below the 20 simple moving average. So watch those critical support levels very closely, because if we do start closing below support, that could mean that we are going into a bear trend, but right now the trend is still bullish. On the Nasdaq 100 triple Qs, we see a very different story, and we did close down negative 2.59% today. The reason the Nasdaq 100 is a different story than the S&P 500 is that we did get a cross of the 5 EMA below the 13 EMA. We also got a price action close below the 20 simple moving average, and we could see that the 20 simple moving average no longer looks like it's positively sloping, and it sort of looks like it's flat and getting ready to roll over. So on the triple Qs, we're looking a lot more bearish than we are on the S&P 500. We could see that we are coming into a very critical support level that the price action will test possibly as soon as tomorrow, which is down here at Qs of 319. That's also going to be the 50 EMA, as well as a strong support level, which was a previous all-time high back here in January of 2021. So the Nasdaq 100 is getting ready to test some previous highs from this year, and it is giving back a lot of its recent gains. We do see a gap above as well, and that gap above will close around a target of 330. So there's plenty of volatility in the tech sector, and it looks like tech is getting absolutely routed right now, and we see a lot of selling in that sector. So watch this critical support level at 319, because if we do start breaking down below that, that will look like a very bearish sign for the Nasdaq 100. Now to make this even more confusing for you, we have the Dow Jones, which today actually closed in the green, going up 0.09%. So we see the S&P 500 is down about negative 1.8% from all-time highs. The Nasdaq 100 is getting ready to test its 50 EMA, and we have the Dow Jones over here trying to make brand new all-time highs and actually going higher for the day. So on the Dow, we see the price action closing right on top of the 5 EMA, and we still have a very strong bull trend on the Dow. We're still trading up above support, which we did get tested, and we got a bounce off of today, which is right around 312. So on the Dow, we still have a bullish trend, so our price target above is still up here at $327. So I'm still expecting to see the Dow continue to trend higher, even though we are seeing weakness in the S&P 500 and the tech sector. Don't forget that a big portion of the S&P 500 is actually technology. So on a day that technology is selling off so heavy, it's not surprising to see the S&P 500 getting dragged down with it. So the Dow Jones is actually telling us that this is not a broad stock market sell-off. If it was a broad stock market sell-off, we would have saw the Dow Jones red today as well, and we did not see that look on the stock market. Later on, we're going to take a look at the sectors, and you're also going to see that there were sectors that were outperforming the market today. Next up is the ARKK ETF, and we saw ARKK also getting sold off heavily today, going down negative 5.79%. ARKK did have the 5 EMA cross below the 13, and we did get a price action close below the 20 simple moving average. So ARKK looks like it's coming down to close this gap, which is right around a price target of $142. It's very likely that that gap close could act as support, but we're also likely heading back down to the 50 EMA, which is right around $138. If we break below the 50 EMA on the ARKK ETF, there is another support level down here at $135. So right now you can see the tech sector and the ARK ETFs are getting hit the hardest, and a lot of those big blue chip tech names are getting sold off right now. So be patient, because it does look like we have more support levels to test before we finally do see that bounce. On the VIX, we went up 6.35% today, which tells us that fear is increasing in this market. Remember that we're likely to see new all-time highs as fear heads lower, but right now we're seeing fear increasing day over day, which means that we're likely to see more selling and a possible deeper correction. You can see the 5 EMA is positive sloping, and it does look like it's getting ready to cross back above to the 13 EMA if we do see the VIX start increasing anymore. But right now we're still holding below resistance at 24.8. So watch that 24.8 level on the VIX, because if we do crack it and go higher, that will mean that we're likely going to see more selling and a deeper correction in this market. If the VIX starts heading lower below this resistance and we start heading back to VIX levels of 21.5, we could see a relief rally and we could see a bounce off of these levels. It's very likely that we're going to see at least one more day of selling though, because we're very close to some critical support, and the market loves to test support levels before it continues to trend back higher. On the US dollar, we continue to see weakness, and we did see the dollar going to a new daily lower low. It does look like the dollar is picking up in that bearish trend, and it's likely going down for its last leg lower towards $89. Now, one thing to note about the dollar is it typically means a stronger stock market, but we're not quite seeing that just yet. So it's still possible that we have more upside in the stock market as the US dollar continues to weaken down towards these levels at 89. The weak dollar should mean strong gold, and we did see gold going up 1.44% today. It looks like we did get a confirmation bounce off of the 1776 level, which means the next level I want you to watch for gold as a price target is up here at 1826. We can break and close over 1826. It's likely we're heading back up to 1861. On silver, we're maintaining that bullish trend, and we did crack through resistance at 27.5. Now we could come back down and retest that level as support, but it is likely that silver is heading up to my price target up here at $29. On Bitcoin, we broke over my price target at 54,700. And we do look like we're starting to see some selling, and that level is now trying to hold up as support. I do have a new price target for you on Bitcoin if we do continue to head higher off of these levels, which is up here at $62,520. We still see a nice bullish trend on Bitcoin, and the price action still closing over the 5 EMA, so it is still likely that Bitcoin is going to head higher in the near term. However, I do think Bitcoin is reaching a very important market top, and we will see a deep correction in Bitcoin in the very near future. So I wouldn't be buying Bitcoin at these levels, and I definitely wouldn't be trying to go long on Bitcoin until we see a deeper correction, because right now there's very little upside, but there's potentially a lot more downside. On Amazon stock, we see more selling going down negative 2%, even though it did look like Amazon was getting ready to break out and we were starting to break above critical resistance levels. The market is starting to sell off on the tech sector, and we're starting to see more weakness in Amazon stock yet again. If I zoom out here, you can see that Amazon is stuck in a consolidation wedge, and it does look like it's getting very close to getting back to the bottom of this consolidation wedge. So look for that level right around 3160 to hold up as support, and see if we can possibly get a bounce and start trying to break back out of this wedge to the upside in the very near future. You can see on Amazon stock that we're trading below the 50 EMA, and we are developing some bearish trending. So if we do break down below this wedge, there should be another support level down here around 3090. Next up is Tesla stock, and remember with Tesla stock, I said that we were likely finishing that fifth wave, and I'm now taking Tesla off of hot stocks because it's likely going into a bear market. Ever since we hit that price target at 906, we've been seeing selling, and we're now getting price action closes below the 50 EMA. Remember I said that Tesla below 800 is bearish, and we did get some confirmation closes on Tesla last week, which was an indication to get out of the stock before it heads lower. It's very likely that Tesla is going back to the 680s, and it is possible we could find support in the 690s before we get there. If Tesla does break down below 685, it could come all the way back down to about $618. So there's plenty more possible downside in Tesla stock, so I would not be trading this stock to the long side until we find out where support's going to be. Right now we have bearish trending, and we're trading below the 50 EMA, which is not a bullish sign for Tesla, and we don't want to try to catch a falling knife. On Apple stock, we also saw a lot of selling today, going down negative 2.98%, which is hand in hand with why the tech sector is looking so weak. Remember that Apple is a market moving stock and it can also drag down the S&P 500 with it. So we saw Apple's price action closing below support, which was right around the 127 level. So it's possible Apple could bounce off these levels soon, but if I zoom out here, you can see that there's not a lot of support left on Apple, and it is likely if we don't bounce off these levels, we could head down much lower. So watch Apple at the support level right around 126 very closely, and if it doesn't bounce and start heading higher, it could be a sign that it's time to get out of this stock because it could be heading much lower. Next up is the financial sector, which we actually saw going up 0.93% today, which shows us that there's still a lot of sectors in this market that are doing very well. We see the price action on financials over the 5 EMA with a very strong bull trend. So the financial sector is actually looking very good right now, even though some of the rest of the stock market is not looking so hot. On the industrial sector, we went up 0.32% today, and we also see a price action close over the 5 EMA with a very strong bull trend. So the industrials are joining the financials, and they're also looking very bullish. On the healthcare sector, we went down about 0.25%, and we're closing below the 50 EMA with some bearish trending building up. So it does look like there's more weakness coming for the healthcare sector, and it could be heading much lower. And then lastly, we're going to take a look at the energy sector, which we saw going up 3.46% today. So we see the energy, the industrials, and the financial sectors doing very well today, but we did see weakness in healthcare and tech. So right now, tech is sort of dragging down the whole market, except for some of these sectors that are doing very well. So this is not a broad stock market sell-off. This is just some short-term pain for a lot of those hype stocks that went way too far, way too fast, and now they're going into a short-term bear market while they correct before they can continue to go higher. So going back to the S&P 500, the tech sector is going to be key, and we really need to see some of these big name tech companies like Apple find support and start heading higher soon for the S&P 500 to stop the bleeding. You could see with the NASDAQ 100 that we had a lot of selling, and it's looking a lot weaker than the Dow Jones. The Dow Jones is by far still looking the strongest, so we're definitely seeing a sector rotation, and we're seeing a lot of money go into some of those other sectors that were underperforming during the recent months. So I would expect to see continued weakness in the tech sector until we find support and start bouncing off of one of those critical levels. So continue to watch those critical support levels, and don't be afraid to get defensive in this market, because if we are heading into a deeper correction, you'll be very happy that you raised some cash and that you can buy at much lower levels. Like I always say, get defensive in this market as we get to my price targets. And as you can tell from the chart, ever since we hit 393, we've definitely seen some selling, and we can definitely see more selling. So you don't want to get too overconfident in this market and try to find where the bottom is. Let the price action show us where support is, and we're going to see that confirmation bounce when we finally get there. So if you need help with this volatile market, or you're looking for a disciplined trading community, come check us out at the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of this video. Alright, next up, just a quick announcement is I will be making changes to hot stocks, because a lot of our hot stocks that we got used to covering are currently going into bear markets, and they're no longer worth calling hot stocks. So I'm going to be bringing you a brand new list of hot stocks over the coming weeks, and my Discord members will be finding out what the hot stocks are going to be before I put them up here on YouTube. So last week we identified a new hot stock, which is Lockheed Martin, ticker symbol LMT, and I'm going to be bringing this to you as the sole hot stock for the night. So on Lockheed Martin, I want you to watch the support level down here around $333, because that's going to be the best entry. If we do break down below 333, I want you to try to get this stock around the 320s. Now to the upside, we did have resistance around 340, but we did close above that level today, and it does look like we're getting up towards the first price target, which is right around $344. So the price targets I want you to watch on Lockheed Martin are going to be $345, $348, and $357. There's still plenty of upside in this stock, but it is still possible in this volatile market that we still see more selling. So watch the support levels as well at 340 and 333, but we do have Lockheed Martin breaking out of this resistance trend line, and we did get a confirmation back test to that support level, and we are bouncing. So the stock does look primed and ready to run, and it should have no trouble getting up into the 350s in the very near future. Now there will be a strong resistance level right around the first price target, so you do want to watch that level very closely, and I would consider taking some profits there if you are in this in the short term. So remember, there's going to be more hot stocks coming very soon, and I will still have brand new hot stocks daily on the Stocks Channel Discord. So if you haven't already, come check us out at the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.